Morning, it's Monday the 5th of August. I'm going to go through the commodities, gold, silver, oil. I'm going to look at our trade ideas for Monday, and I'm going to show you the stock markets as well, which have been plunging, of course. Okay, so first up, here's gold. We have been stuck in this sideways channel now for 4 months. It's getting more difficult to identify low-risk trade opportunities because of that. The trend lines are being respected, of course. The upper trend line comes in at around 24.88. The lower trend line comes in at around 23.05, 23.00. The 1 hour chart is just a confusing mess because we have no direction. We're just chopping up and down in a random, erratic pattern. If you look at the 4 hour chart here, you can see there is a bit of support around the 24.10, 24.00 area if you are desperate to trade, but I don't really see great opportunities in gold right now other than selling at the upper trend line on the daily chart or buying at the lower trend line at the daily chart, but they are about 180 points away from each other, so it's a bit tricky at the moment. We need to let this pattern play out and see which way we break. Going back to the daily chart, you see these two dojis here over the past 2 days. Friday was a really volatile day. We traded in a range of, let me see now, $67 range. That's big. We rocketed when the unemployment and average earnings numbers came out, which showed a weakening economy, which is what you would expect from gold, because expectations of an interest rate cut increased. In fact, we're even looking for half a basis point cut in September now, when we were only looking at a quarter before. That's how dramatic the numbers were. But gold couldn't sustain the rally and crashed down to 24.10. I think the reason for that was probably because stocks were crashing, and I've seen this before. Gold investors liquidate their positions in order to pay the margin call on their stocks. I don't know whether that was the reason. Gold did bounce back anyway, but you can see we closed unchanged on Friday. We closed unchanged on Thursday despite volatile conditions. So it's just showing you there is a balance in the market between buyers and sellers. So direction-wise, we're not really going anywhere, and we haven't done really for 4 months in gold. You can see even in my report to my subscribers today, I'm a little bit vague. I'm not sure what to do. We have minor resistance at 24.45, 24.50 if you're desperate to trade, and we're trading around there right now as I speak. So a break above there could be positive for gold today. Now, it's not like me to struggle to get trade ideas, but even silver's tricky at the moment. This is the daily chart for silver. I could put some trend lines on here. Let me just do that. I certainly want to put one there, and I probably want to put one here. So that does show that we're maybe starting a bear channel, or maybe it's a bull flag. But I can't do much with this pattern at the moment. In fact, even on the short term, if I show you the hourly chart, even on the 1 hour chart with my Fibonacci lines, my trend lines and my moving averages, we're just not getting any clear signals. In fact, the Fibonacci levels are not even really being respected. The moving averages are not giving me much clue at all. So at the moment, unfortunately for silver, I'm sitting and waiting. Oil on the hourly chart is showing a 1 month bear trend. That's clear. So selling into strength would be the way to go. When you look at it on the daily chart, all the way back to 2022, middle of 2022, you see that oil's been stuck in this sideways channel. So for trend followers like myself, it's really very difficult. And the only trend I can find is in the very short term on the 1 hour chart going back a month. So we have a 1 month bear trend. My Fibonacci levels are giving me some trade entry points, which I've put in today's report. If you're not a subscriber, then I'm going to give you a couple of levels here. We've got first resistance at 74.30, 74.60, and that's here. And we've already hit it. And we look like we've got a high for the session. Well, for the session so far, I'm talking to you at around 6:45 a.m. in Thailand. So we haven't been open for very long, but you can see that this level is holding at the moment in oil, and I think further declines look likely. The Japanese yen has been soaring. So all the currencies against the Japanese yen have been collapsing. This is the New Zealand dollar versus the Japanese yen. Now, there's no way that I could have predicted this. Look, every single candle on this chart since the market reversed on the 10th of July. So for nearly a month now, the market has gone down almost every single day. We've got one green candle in that month. So it's clearly one-way traffic. All the hedge funds that are short the yen have been demolished. They must have lost so much money. But there were record short positions in the yen at the beginning of July, and they must have all been wiped out. You can just see that from the price action with these big red candles taking out all the long positions in the New Zealand dollar versus the Japanese yen. We are even trading below the 500-day moving average. So that tells you something about how significant this move is to the downside. And you can see that that 500-day moving average is usually a pretty solid support and resistance line. Look, really worked well as resistance here in 2019, really worked well as support here through 2021, 22, 23. So it's significant that we have broken lower. The euro yen had a really good support level, well I thought it did, around 164.00, 163.30, but that did not materialize. The market just plunged through that support level like it didn't even exist, and the yen has continued to soar against the euro. I see us going to around the 156.00 area, so we could easily have another 300 pips to the downside. By the time we get to 156.00, we should have support from the 500-day moving average as well. Price action wise, there isn't really a lot of support there, but I think the Fibonacci levels are good. And when you couple that with the 500-day moving average, it might be worth a long position. I'm going to have to gauge it when we get there, of course, but we are getting very oversold. So hopefully by the time we're down there in about 300 pips time, it might be a buying opportunity. The Canadian dollar has been pretty weak across the board against most currencies, and it's really plunging against the yen. We've broken all sorts of support levels. We've even broken the 500-day moving average. So it looks like we're about to retest this December low. I don't think that's going to hold. It just looks like we're going to see further collapses in the Canadian dollar versus Japanese yen. So any bounce, I'm looking to sell if we get any bounce at all. Unfortunately, I've missed this move myself. I've been trying to sell currencies against the yen all the way down, but I've had my sell levels above where the price was trading each time, hoping for a bounce so I could get in at a really good resistance level. It just hasn't happened. The market's just collapsed. What I should have done was selling every time we broke to a new low, but I didn't use that strategy. We've just fallen so far. It didn't seem sensible. And unfortunately, I paid the price by not capitalizing on this move. Now, the dollar yen is actually about to test a pretty important support level. So I've got a trend line going back almost 3 years. We have the 500-day moving average as well, the green line, and we've got some fib levels, not strong fib levels, but around the mid 144 area, there could be some support for the dollar yen. What that does mean, though, is we start breaking below that area, certainly below 144.00, that's going to be another important sell signal. So this is quite a crucial area. I can't guarantee it's going to hold, but it's significant enough for me to be paying attention to it. If you want to take a small gamble on a bounce, fair enough. We're getting oversold. It could work, but I would be prepared to reverse into a short position on a breakdown below 144.00. The Australian dollar has been really weak against a lot of currencies across the board. If you look at it now against the yen, we've just been plunging. We've had 2 days with green candles since this big bearish engulfing candle on the 11th of July. So almost a month, certainly 4 weeks. We've broken the 500-day moving average. It just looks to me like the Aussie is going to lose further ground against the yen. No reason to buy this pair. Okay, I hope you found that helpful. That was my analysis of the commodities and the yen pairs. In my next video, I'm going to move on to the dollar pairs. If you want to get the signals that I provide for my subscribers, if you want to get them today, if you want to get my trade sheet, if you want to get my full analysis on oil, silver, gold, stock markets, I'll put a link below. You can sign up and you can copy all of my trades immediately.